Are you looking to get into real estate? Or maybe you're trying to scale your already existing portfolio? I'm going to assume yes, because you are watching this video after all. But tell me if this situation sounds familiar. You understand and get the many benefits that there are to real estate investing, but at the same time, you're still sort of unsure about which approach to take and what deals you should buy. This kind of makes sense because the housing market is super confusing and there are a lot of different ways to invest in real estate. It can be very overwhelming. But there are good ways to avoid this sort of decision overload. You can filter down your options to just those that are aligned with your financial situation, that meet your risk tolerance, and of course are well suited to meet your personal goals. And that strategy is to create a buy box. If you haven't heard of a buy box before, it's a term commonly used to describe the criteria that you're going to use to identify your next deal. So it's not really a box actually at all. And it's not really anything complicated. It's just thinking through and committing to the type of deal that you want to buy. And there are different ways to design buy boxes and different people include different criteria, but I'm just going to show you what mine looks like in this video. And there are a lot of different ways to create a buy box. Obviously, it's not a box, it's just a list of criteria, but people include different variables in there. But today, I'm gonna show you what mine looks like. I'm gonna explain to you, first and foremost, why a buy box is important. Then we'll talk about how to complete your buy box for 2024 so you can move forward on your real estate investing ambitions. And as you can hopefully see, by filling in these questions, you can really start to focus on only the deals that fit your budget. You can take on an appropriate level of risk for your situation, and you can design deals that are going to meet your specific goals. I hope you could see how helpful and empowering this is in your investing journey. So follow along today while I craft my buy box for 2024, and you can do the same thing at the same time. You can obviously just recreate this buy box for yourself as you watch this video. But before we get into the buy box, let me just quickly introduce myself. My name is Dave Meyer. I'm the Vice President of Data and Analytics at BiggerPockets, and I've been a real estate investor for more than 13 years. And next week, my newest book is launching. I am super excited about this. I have poured so much effort into it over the last 2 years. It's called Start With Strategy, and it's designed to help investors, whether you're working on your first deal or your 50th, to craft a real estate investing strategy that is personalized to you. During this time, if you buy in the next week or so, you get a free strategy planner. This is a workbook where you can sort of write out all of your strategy and go through these exercises. Normally, that's a $30 value, so you probably want to get that. You'll also get a free group coaching call, an Excel toolkit, interviews with successful investors, and a bunch more bonuses. So if you want to grab the book, head to biggerpockets.com/strategybook and make sure to buy it on the BiggerPockets bookstore because that is where you get all the bonuses. You can't get it anywhere else. Link is in the description below. All right, with no further delays, let's craft a buy box for 2024. And I'm actually just going to show you my actual one, the one I plan to use over the coming year. And during it, before we get into the buy box, let me just introduce one idea here, which is this deal design framework that I've created. Now, people call different types of real estate tactics different things. Like some people call strategy, for example, like a rental or a flip. Other people consider BRRRR a strategy or buy and hold a strategy. Some people think creative finance is a strategy. None of these things are wrong. It's just people just call them different things. And so I've created my own framework for discussing these things. I call it my deal design framework. We'll put it up on the screen and I'll show it to you, but just so you know sort of the words I'm using and some of the different options. And we're going to use these different options to sort of filter down the ones that are aligned with your personal situation, right? There are all these different ways that you can invest in real estate, but you need to pick the ones, not just based on what you see on social media or what I am doing personally. You have to pick the ones that are right for you and what your personal goals and situation are. And in the book, I go into this in detail, but today I'll just share with you the things that I think about. I call it your vision. Well, I go through and figure out my own personal values, which you can see here. And I want to find deals that are aligned with those values, that are supportive of these ideas and the things that I care about. I also use this thing called a resource audit, which is how much money I want to put into my portfolio, the skills that I can contribute, and the money. And sorry, I'm blocking out how much money I have. I'm not going to share that publicly on YouTube. I also show the other things that I have here, which is my risk profile, like how long I'm investing for. Personally, I'm trying to invest for the next 20 years. So when I make my buy box, I have to think about that because flipping, for example, again, I'm not picking on flipping, but flipping is like a short-term thing, right? It maybe lasts 6 months. I want to invest for 20 years. And so I want to build my buy box around that idea. I also want to build my buy box around my risk tolerance. I'm fairly risk tolerant. And so I'm going to find deals that take some big swings. For you, it might be finding deals that are really conservative. There's no right or wrong answer here. You just have to think about what you want before you build your buy box. Next, this transactional income plan. I know a lot of people want to quit their jobs to get into real estate. That's not me. I like my job at BiggerPockets. I'm going to keep working at it. And as such, I don't have to prioritize cash flow as much because I have a full-time job. If you are really into financial freedom and you want to quit your job soon, then when you build your buy box in the next section of this video, you're going to want to think about deals that really prioritize cash flow because those are going to be super important to you, right? You need that cash flow to live your life if you're trying to retire soon. And then lastly, we have your financial goals, right? Like you need to know what you're trying to accomplish. This is true of any goal in your life, right? Just take a minute before we go on. You can even pause the video. Just take a minute to think through the things that you're trying to accomplish. Do you want like a really low intensity business that's really easy to manage? Do you want to work full time in real estate? Are your financial goals modest or big? Think about that because as we go through the buy box, those are going to be really helpful in helping you filter it down. All right, once you do that, now it's time to get the buy box, and it's going to be a lot easier now that we know what we're looking for and we can pick deals appropriately. So the first thing in the buy box is deal type, quote unquote. What I call deal type is what some people call strategy, but I think all of this is strategy in my mind. So I call this deal type. And these are things like rentals, short-term rentals, flipping properties, and commercial. Now for me, based on my vision, the two that I'm going to put in here are rentals. Because again, I'm trying to invest over 20 years and commercial properties. Those are the two things that I really like because I think they provide a good balance of cash flow. I care a little bit about cash flow. It's not my most important thing, but I would not buy a deal that doesn't cash flow. So I want deals that cash flow at least a bit, but I really want that long-term upside. And I think rentals and commercial do that. Now, I'm not putting flips in here because I remember on my vision, I wrote I only have 5 hours a week, and that is not going to work for a flip. So I'm just doing rentals and commercial. For you, it could be totally different depending on what you want. The point here is to filter it down though. So don't just pick all of them. Don't be like, I want to do flipping and rentals and short-term rentals and medium-term rentals and everything. That's what leads to this analysis paralysis and overwhelm. Just filter down to the one or two that are most important to you. After deal type, I like to go to management plan. A management plan is how you're going to manage your business, right? Like, are you going to be active at your property every day, fixing things, meeting with the tenants, or are you going to do something more passive? You can be completely passive, like investing in a syndication or a fund, or you can do a hybrid, which is sort of like, doing some of the work yourself, outsourcing some to a property manager. And I am only going to do either hybrid or passive next year. I don't know if you know this, but I live in Europe. I only invest in the United States. And so I can only really do hybrid or passive. I can't go to any of my properties. So for me, this one's kind of easy. Either do hybrid, which I still do for a couple properties. I still do a lot of the tenant communication. I do the finances for a couple, and I outsource the property management. Or I'll do something completely passive. I invest personally in a lot of syndications and funds. And so I would continue to do that next year. That's why I'm putting it in my buy box. Next is business plan. And again, some people call this strategy, but I think business plan, the way I think about a business plan is how you're planning to extract the most value out of the property you buy. And so some common business plans are like rent by the room, the BRRRR method, which you may have heard of, which stands for buy, rehab, refinance, rent, and repeat. It's a value add strategy. Value add is its own business plan where you buy something that is not up to its highest and best use, and you do a renovation and bring it up to its highest best use. You could also do a house hack. You could do a buy and hold strategy. There are all sorts of different ways that you can operate your business. I am going to focus on really a couple here. I like buy and hold because it's easy, right? It is, when you buy something that's already cash flowing and doing well, that's one of the easiest and most passive ways to invest in real estate. So that's definitely going on my buy box. I also like value add given current market conditions. I think it can work really well. And a new one that I'm learning about is rent by the room or co-living. I don't know if I'm going to do this yet, but I've just started learning about it over the last couple of weeks. So I'm going to put it on my buy box because it's something I want to consider next year. Remember, putting something on your buy box doesn't necessarily you're going to mean do every single one of them, but it means these are things that you're going to actively consider. So it's really important to find the sweet spot, right? You don't want to have everything listed because that's overwhelming, but you want to consider 2 or 3 different options for each of these ideas so that you can be flexible as the year unfolds. For financing, this one's pretty easy for me and probably will be for most of you, but I finance all of my deals either using conventional, DSCR, which is a debt service coverage ratio loan. Now for asset classes, this is like kind of the type of building that you want to buy. For me, I personally really like small multifamilies. That's what I'm going to be primarily looking for. But in one of the two of the markets I'm considering, I also think just single family rentals actually offer a better return. So I'm going to put that on my buy box as well. And although I think commercial's in a correction, I'm going to keep my eyes out for, multifamily opportunities next year. So I'm writing that down as well. So that's a bunch of different things. So that is pretty much all of them, but I don't buy like office buildings. I don't buy retail. So I'm not putting anything there. Now, ownership is something that I think a lot of people overlook in terms of their buy box. Now, you can buy real estate in different ways. So you can buy directly. You're the only owner of a property. You can buy with a partnership where you find, someone that you want to partner with, or you could do one of the more passive sort of group investing options like a syndication or a fund. Of those options, for me, I just like direct investment where I own something myself, or going the entire passive route like syndication and fund. The next one is property class. This is basically, it's a very subjective measurement for what condition a property is in. A-class properties tend to be in really good shape in good locations. They command the highest rent, but they're also the most expensive. And so even though they have high rent and they're expensive, they don't always generate the best cash flow. Often in these days, negative cash flow. B is a little bit lower than that, C is lower than that, and then D is what I would call uninhabitable properties, like something that needs to have full gut rehab. So for me, I like the sweet spot in the middle, like these B and C classes where there's an opportunity for value add, where you can improve the condition of the property and improve hopefully the value of those properties. So those are the two I'm looking at. Now, location, this one's hopefully self-explanatory. Where do you want to buy? I've been investing in Denver for 13 years and I will always look for opportunities there. I have a good team in place in Denver, but I'm also looking to move into some Midwest markets next year because I want to find more cash flow than is available in Denver. Denver's super hard to find cash flow right now. So I'm updating my buy box. I'm changing it from previous years to now include direct ownership options in the Midwest, which I've never done before. And I'm excited about it. I think it's gonna be really fun. So that's it. Those are the deal design frameworks. And then there's a couple of small financial things that you should also be thinking about. So for me, purchase price, I'm looking for anything that's up to $1.5 million, but I don't want to do big rehabs. I said I was willing to do value add, but I'm not looking to put in $100,000 of cash to flip a luxury property. I'm willing to put up to $50,000 into a property to make it nice, livable, safe, all those good things, but I'm not going to do a big rehab. So that sort of helps me focus, right? Because I listed a lot of different options in my buy box so far, but I don't want to just buy anything and I want something that's in relatively good shape. So I'm saying rehab under 50K. Risk, again, my risk tolerance is 4, but right now the market is a little bit riskier. So I will consider some lower risk options. Like I might buy something in the Midwest that has modest cash flow and modest appreciation potential because I think it's safer than doing a big burr in Denver, for example. I might do both, to be clear. I might do both, but right now I'm considering less risky, more stable options than I would in a normal year. And so that's why I'm sort of expanding my risk tolerance here from 2 to 4 out of 5. That's just a subjective thing. I just rate risk between 1 to 5. So I'm calling it a 2 to 4. The last thing is return on equity, which is a similar metric to cash on cash return. I prefer return on equity for reasons I won't get into during this video. You can read it in the book, but they're very similar, but I like return on equity and I want at least 3%. Like I said, some people buy properties that don't cash flow. That's not me. I like to buy properties that have at least a 3% cash flow, not because 3% cash flow is going to change my life really in any way, but I just don't want to have to think about putting money into it. I want to know that I'm at least breaking even on cash flow and that appreciation and value add and amortization, these other ways of making money in real estate can drive my profits. And if my cash flow goes up, that's great, but it's not the most important thing. Again, because when I look at my vision, I'm not trying to retire for 20 years, so I don't need cash flow right now. I'm trying to just deliver solid returns for myself, and then I'll work on cash flow. My buy box will evolve to include cash flow more when I get closer to my retirement date or my time horizon. So that's it. This is my buy box, and hopefully you can see the benefit of this. Out of all of the different ways that I could choose to invest in real estate, I have narrowed it down to just those that make sense for me and my personal goals, my risk tolerance, and what is going on in the market around me. I hope you see that what I showed you at the beginning, that vision, is how I figured this out, right? All of the things in my vision are aligned with my buy box. And even if you don't have a formal vision like I do, you should still make your buy box considering your own personal situation and goals. Like you have to use that as the frame in which you decide what goes into your buy box. And the last thing I'll say before we go is remember that my buy box, the thing that I just showed you, is a bit broad, right? I have 2 or 3 selections under every situation. And that's because I'm an experienced investor. I've been doing this for 13 years. I have the financial resources to invest in different types of things and consider different strategies. But if you're new, you may want to narrow it down a little bit more. I actually recommend for people who are new to investing to really focus on maybe 1 or 2, maybe even 1 for each of these topics. I think that's really helpful to avoid analysis paralysis. Like if you can say, I'm going to just focus on long-term rentals in Nashville, Tennessee under $400,000, great. You don't need to be complicated. You don't need to think about every strategy out there. The point of the buy box is to focus. And when you're new, I think the more focused you are, the better. It will help you get your first deal. So just take that in mind that I am more experienced. I have a broader buy box, but it's perfectly okay and often advised for you to have a more narrow buy box. Whatever you decide, the main point here is for you to make these decisions, right? Like write them down. They're not set in stone. If you want to change your buy box in 2 weeks, just go change them. But the point is to set an intention because it can help you focus. Again, this helps you eliminate analysis paralysis and it helps you identify deals that are appropriate given market conditions and they'll move you forward towards your financial goals. So I implore you, if you're going to be investing in 2024, now is the time to craft your buy box. This is going to set you up for a year of success. And remember, if you want some guidance on how to craft your buy box or your vision and the rest of your personal strategy, make sure to check out my new book, Start With Strategy. Pre-orders end next week, so if you want to get all those bonuses, grab a copy today. The link is in the description. Thank you all so much for watching. My name is Dave Meyer, and I'll see you next week for another video about how to invest in real estate and pursue your financial goals.